Shortly expecting comments from ECB Schnabel.
non mi ha dato delle belle conferme. Anche se porco Diaz, sto guardando la tua 15 secondi e vedo che minchia c'avevi un ordine da 500.
Hai capito?
Porco Diaz.
Anche quello, però tendenzialmente gli ordini grossi, da quello che io ho visto,
Eh sì,
quindi
sì,
mia
sì.
esperienza personale, tendenzialmente, boh, cioè, non so come, tipo spaventano un po' il mercato, quindi magari delle volte, cioè, vedi 500, però boh, tendenzialmente magari tende un po' a scendere ancora un po' e poi magari parte, capito?
Sì, l'ho
Cioè,
notato anch'io.
non è che vedi l'ordine da 500, quindi allora prendi e te lo chiudi.
Quando è proprio così grosso, tendenzialmente sì. E
Sì?
infatti è partito. Quando sono proprio tanto grossi, ok? Sì. E deve partire subito il mercato, capito? Quindi il trucco è, io almeno sulla mia esperienza ho notato che devi contare circa 30-40 secondi. Se entro 30, massimo 40 secondi non ti parte, diffida da quell'ordine. Almeno stai molto attento perché si può fare quella cosa che hai detto tu che ti va a rintracciare leggermente contro e comunque inizia a tradarci su e giù senza dare una chiara direzionalità di quello che fa. Ma se parte subito così come ti ha fatto dopo che è stato inserito con la 10-1 e parte soprattutto dalla tua zona, perché comunque vedi che dalla 10-1 non mi ha dato un buon setup per entrare, però ti ha dato in questo caso una variante e questa è la bellezza del mercato perché non è mai uguale. Qua io per esempio avrei aspettato un altro tipo di setup dalla 4-1 alla 10-1 e invece non mi ha dato quel setup ma mi ha dato un trigger molto aggressivo, quindi un big order che mi entra e mi spazzola via tutto praticamente, vedi che dopo che è stato inserito, subito dopo il mercato è schizzato, non è stato a arrangiare là. E quindi quella era la nostra conferma effettivamente per un potenziale entry long. Poi effettivamente da là il mercato è partito al rialzo. Però questo è per esempio una roba che ho notato adesso solo, ok? È una roba che non mi ricordo di aver visto, quindi è una roba nuova. È una variante nuova di comportamento all'interno dell'area per il long.
Sì. Sì, io devo prendere un time in sale perché giuro, senza time in sale mi sento perso, cazzo, dov'è il time in sale qua?
Ma ti consiglio, guarda, mettiti un buon filtro sui big orders sulla 15 secondi e basta solo quello. Anzi, forse è più chiaro perché lo vedi proprio subito la continuazione del prezzo dopo
Non so,
l'emissione del big order
allora,
oppure no. O ti trovi scomodo tu.
vediamo,
Perché guarda che devi guardare la 10-1, la 4-1, l'M30, il TPO, la 15 secondi, il DOM. Più cose hai da guardare, più è difficile filtrare le informazioni e riuscire a stare sul pezzo.
no, quello sono d'accordo assolutamente, però
Infatti, poi i primi
com'è che
15
si chiama
minuti
il Big Trade? Com'è che si chiama su coso qua? L'indicatore
large order,
large,
forse,
large
sai?
volume, large, sì, ho trovato. Qua c'è il volume
Tipo una
flash.
roba simile?
Sì,
Sì,
si
dovrebbe
chiama
essere tipo una
large
roba
volume
simile.
trade indicator. Cioè, qua è impostato a 100.
A
Come
100
potrebbe...
impostato?
Ah,
No, no, mettilo a 30. Mettilo a
che ci sono
30 e
troppi
vedi un
pochi
attimo
ordini,
come
non riesco
trend.
a capire come si sta muovendo il mercato, capito?
No, 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 mettilo a 30. A 30 va più che bene. Se i volumi sono bassi, mettilo a 20. Se i volumi sono alti, stai tra un 30 e un 40-50 massimo.
Mm-mm.
Però il migliore, io ne ho provati un bel po', ma anche Satya lo diceva che anche lui ne ha trovati, anche lui fa così più o meno come me, lo imposta a 30 di default, se vede che effettivamente ci sono tanti ordini da 30 o comunque molti altri grossi, aumenti il limite e magari lo sposta a 50. Però già
Qua sta
così a
succedendo
30
un po'
dovrebbe
di roba
andare più che
interessante.
bene. Eh?
Sta succedendo un po' di roba interessante. Mando screen subito.
Vai, vai, vai. Sono
Io non si è
curioso.
collegato nessuno oggi.
Minchia, veramente, sti rotti in culo.
Letteralmente. No, ti dico, venerdì figo, ho fatto una sessione di Cristo, fra porca puttana, guarda.
Sì, bella.
Sì, sì, invece oggi ho preso già 3 stop. Vabbè, non frega, cioè, nel senso, io cerco di non prendere trade a cazzo di cane perché non mi piace come a livello proprio concettuale, cioè non è che dico boh carino, no, cioè cerco di prendere cose abbastanza sensate secondo
ECB
me.
Schnabel says euro is
Più anche a
Sì, sì,
livello
sì. Cioè con
it
dietro
should
un
be
psicologico.
ragionamento
strengthened.
logico, dici anche.
Sì, ma più che per una questione
Macron, speaking in Slovakia, says there will be a meeting of Ukraine's Coalition of the Willing in London this Friday. Shortly expecting Bank of Canada's business outlook. So in the Bank of Canada survey, a third quarter business service indicator is down 2.28 from 2.4 in the second quarter. Expectations for growth in domestic and export sales remain soft amid trade tensions. Balance of opinions on indicators of future sales is up 0, up from -6 in second quarter. 27% of firms reported outright declines in sales over the previous 12 months, up from 24% in the second quarter. 18% of firms expect inflation to be above 3% for the next 2 years, down from 23% in the second quarter. 33% of firms expect Canada to be in a recession over the next year, up from 28% in the second quarter. 35% of firms expect lower labor costs over the next 12 months. 14% see higher labor costs.
Fammi capire un attimo. Poi ci devo togliere sta roba delle conferme comunque perché mi hanno rotto il cazzo.
Cioè ogni volta ti chiede la conferma quando entri al mercato?
Sì.
Sì, non mi
Infatti è una
male,
rottura di
zio.
cazzo.
C'hai praticamente CR ancora di default tu, cioè c'hai ancora un botto di robe da
Sì!
sistemare, zio, perché non puoi tradare così
No, infatti
effettivamente.
è critico poi, cioè
C'hai
io...
anche la roba che ti si aprono i chartbook di esempio in automatico, immagino, vero?
No, uno l'ho sistemato, però nella nuova istanza
Ah,
sì.
ok. Ah, sì.
Bravo, non c'ho avuto tempo. Io, allora, ti dico, io la sera
Sì, sì,
sto
sì.
cercando di sistemarla la sera, quando non c'ho altre cose da fare, capito?
Ma fai bene, perché guarda che
Perché
ci
non
per
posso
via
prendermi
tempo,
la
è
giornata per
impegnativo.
sistemarmi la sierra, cioè piuttosto studio, trado, faccio altre cose. La sierra la
Sì,
sistemo
sì,
quando ho
sì, sì.
tempo. Comunque adesso ho aperto uno short, Dio santo, non riesco come faccio a mettere lo stop loss? Allora, aspetta, ho aperto uno short, quindi devo aprire un buy. Quindi tasto destro sul livello di prezzo che è il 5,85, buy stop quantità 2.
No, se sei by,
No,
by
sono short.
limit, non by... Eh sì, by limit, quindi. Cioè,
Buy stop.
sei short, vabbè sì, se
Short
vuoi
devo mettere
uscire
un buy stop.
market, se sei entrato short esci sempre limit solitamente, è lo stop che lo metti con l'ordine stop, però se ti trovi comodo anche con un buy stop, lo puoi
No,
fare
metto il limite
tranquillamente, sì
adesso.
sì,
No, vedi, ho fatto il limite, porca
perché
miseria la posizione. Devo vedere il buy stop.
in teoria dovrebbe essere uguale, cioè anzi il buy stop è peggio perché, allora, perché buy stop puoi avere un tick in più, ma l'uscita assicurata, ma col sell limit, cioè scusami, col buy limit hai un tick in più nell'operazione, cioè di guadagno, però
Sì,
non hai
sì,
il
sì, sì.
feeling assicurato, quindi devi un attimo vedere, sì, io solitamente entro sempre market ed esco sempre limit.
Esci sempre?
Limit, quasi sempre limit sul primo contratto, perché è quello assicurato, cioè che quasi sempre mi viene fillato, e l'altro invece è manuale, cioè alzo lo stop subito o in profit o dietro dei blocchi importanti e lascio correre, capito? E eventualmente chiudo in manuale.
Non ho capito. No, io ho fatto un macello, zio. Ho fatto un macello
Che hai combinato
assurdo.
qua?
No, 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 non
At 11 a.m. Eastern Time, Trump greets Australia's Prime Minister. This is an open press event. At 11 a.m. Eastern Time, Trump greets Australia's Prime Minister. This is an open press event.
Dai, perfetto, vecchio. Poi sì, poi se per novembre riesci appunto il 27, il 28. Adesso non so ancora bene il giorno, però mi farebbe molto piacere se vieni, bro. Dai, ci sentiamo allora, appena decido quando salire, ti dico.
Canada's finance minister says tariff remission on Chinese steel is very small.
Sinceramente dice un po' qua, un po' si torna.
Fed bids for 3-month bills total $3 billion. Fed bids for 6-month bills total $2.7 billion. And the US is stalling on G7 plan to expand use of Russian assets. at 11:30 a.m. Eastern Time. The US sells $77 billion in 6-month bills, prior bid cover 2.95, prior high yield 3.685%. And the US sells $86 billion in 3-month bills, prior bid cover 2.88, prior high yield 3.845%. It's 11:30 a.m. Eastern Time. The US sells $77 billion in 6-month bills, prior bid to cover 2.95, prior high yield 3.685%. And the US sells $86 billion in 3-month bills, prior bid to cover 2.88, prior high yield 3.845%. Shortly expecting the results of the 3 and 6-month bill auction, I'll lead with the 3-month bill bid to cover ratio. 3.01, 3.01. High yield, 3.81%, 3.81%. 6-month bill bid to cover ratio 3.02, 3.02. High yield 3.66%, 3.66%. Trump will discuss trade and submarines with Australia's PM, and we will also discuss military equipment. Trump on Australia says we will also discuss critical minerals and rare earths. We will sign an agreement. Trump says we'll have so much rare earth material in about a year. Trump says we're also working with other countries on rare earths.
Bonsoir à tous. Ça y est, la première version stable du journal de trading en version web. Surtout mettre ça, la pirate chart comme il faut. Donc si on veut montrer plus, voilà. Comme ça, avec une petite icône pour symboliser qui ne fonctionnait pas au passage des minuit si on avait un trade, les jours de trading. La courbe la journée sur les quelques petites corrections, vos propres couleurs. Tout de suite, c'est peut-être une étiquette. Voilà, comme ça. Pourquoi? Parce qu'au survol de la souris, vous avez une infobulle qui vous dit ce que c'est comme indice. Alors là, dans mon cas, c'est les indices. Voilà. Ici, ça vous dit votre profit. Bon, bah, le lose, il est un peu trop petit. Donc, on ne peut pas le voir. Ah, ici, on peut le voir. Voilà, 14 perdants, 131 gagnants. Donc voilà, cette fois-ci, c'est vraiment fini. Je vous souhaite une bonne soirée à tous, un bon 15 août. Allez, au revoir et n'oubliez pas le petit like de la vidéo. Merci.
The market profile will...
Bonsoir à tous. Ça y est.
Trump says we are talking about taking AUKUS to the next level. So Trump and Australian Prime Minister signed the critical minerals agreement. Trump says China has been respectful of us. Trump says China is paying a lot of money to the US via tariffs. Trump on China trade says potential 155% tariffs come November 1st unless we make a deal. Trump says we expect to work out a fair deal with Xi. We worked out a very fair deal with South Korea. Trump notes that Boeing is doing very well. AUKUS. Trump says AUKUS is a deterrent for China, but we don't need that. Trump on AUKUS says we're going full steam ahead. Trump on the war in Ukraine says Ukraine could still win it, but I don't think they will. Australia's PM Albanese says we can expand processing of critical minerals. $1 billion will be contributed over the next 6 months. And Australia's PM Albanese says Japan is also involved in the critical minerals projects. Trump says we're way ahead of China in AI. Trump on China and critical minerals says, I think China will come to the table. Trump says, I think China will make a deal with us. Trump says, I've been invited to go to China, and I'm doing that early 2026. President Trump has ended his remarks at the Australia bilateral meeting. Bank of America say risks of Fed balance sheet runoff in October are high. The US and Australia are setting up a critical mineral supply security unit.
move
Recording
is a
in
good one because it
progress.
makes sense for two reasons. Number one, we got seek and destroy in effect right here. So you see 99th percentile strike. Up we go. We talked about this. I had a comment about this on Twitter this morning, but basically you saw this thing pop out, and it wasn't there this morning, right? So it took kind of an after the market open, all of a sudden, bam, there we go. And then you'll see these hero deltas on here just clean up, right? You'll see the purple line all of a sudden just start to march higher, and it's kind of like, I know where we're going. And so now here, as we start this call, objective complete, searching, seeking, whatever we'd call it. Always back and forth between seek and destroy and search and destroy. Kind of going back and forth. So that's it. The objective is complete. In all likelihood, we're going to close over 6,700 today. This call spread's got to probably be managed. I don't know if they're going to close this thing up or what they're going to do. It is a 0 DT position. And you can see right here, it's about 8,000 contracts. So that's a pretty good size. Interestingly, the top leg of that is a lot smaller. So it just seems like dealer is mainly long. So that's kind of an interesting position here as we get into the end of the day. And then when we look above here, we got a lot of positive gamma, and a lot of that is 0 DTE. If I toggle 0 DTE back and forth, you can see the map doesn't change all that much. So, what do you take from this? Number one, vol is definitely going to get squished today. We're up 1% roughly, which is still about a 16% implied vol. VIX is down to 18.6. We're talking about how without vol, we'll get crushed in the VIX expiration, especially if nothing happens over the weekend. So far, this is all part of the script. And I don't necessarily think that the removal of positions tomorrow for VIX expiration creates a market, downdraft. But, we're going to look at CPI then as kind of the next sort of trigger. And in all likelihood, CPI is a non-event. And that just means that vol comes in just a little bit more. And then we probably milk things until the Trump Z meeting, right? And so those are kind of the steps. But as of today, we're likely to close above 6,700, which kind of puts us back in that get long and just kind of let that ride stance. Now, if you got any questions, make sure they make their way to the Q&A section of the Zoom toolbar. They keep moving it around on me. Here it is. And a little bit light today. I don't know what everyone's doing. You guys can't see my screen. That's not helpful. I show that I'm sharing my screen. Can you guys not see it? You can see it. All right. Or if you're on your own. Thank you, Pedro and Jay. All right. Everybody's awake. Good check. Okay. Robinhood was down, eh? Oh, because of the AWS thing, huh? Interesting. So at any rate, that's where we are today. If we look at, let's just look at VIX positioning and see what's going on. Now, the argument I was making here was there was a lot of negative gamma in VIX, and that was a lot of calls. So if we go over here and we just look at the open interest, you can see it's still a lot of short calls, dealer short calls. So what that means is that if you own October calls, you are getting punched in the face today, right, with this decrease. And really, there's short calls all the way down here. So what does that mean? Well, kind of like, I don't know about how often the gamma of the VIX complex gets traded, but the point is the same. You're losing value here as the VIX slides down, as you can see here. So that just adds pressure to vol, and that helps boost the market up. And that's why we kind of have this tailwind today and into tomorrow. And then we feed into the CPI later this week. So, and even on that, CPI is a problem for the 24th or after. If you're in the 0 DT space, it really doesn't matter to you. And so when you look at Hero, for example, today, and you can see the S&P 500 Hero, if you are unfamiliar with this fancy new Hero, we are rolling this out in tranches. It's part of our big upgrade that launches 1 week from today. So by next week at this time, there must be a little bit of a bug there. Next week at this time, you will see this if you are an alpha member. 10 to scaling up 20, 30, 40% over the next week. We'll be seeing this new version on trading view based indicator, I should say. So what do you take from this, which is so interesting, is that the teal line and the purple line perfectly overlay each other, right? And just to give you an idea of what this looks like if you have the original system, these two are perfectly overlined. What does that mean? The only thing trading today is 0 DTE, right? The only thing of consequence. honestly, I've never seen it. I mean, I can't say I've never seen it this tight. You don't see, excuse me, the two much more correlated than they are right now. I mean, it's pretty ridiculous. So does that all make sense in terms of seek and destroy at a big 5 billion? Yeah. VIX also getting crushed, right? So that's part of the weird firm structure. Zero DT now reinvoked. Longer dated VIX coming in, but you can pound short dated vol, to offset the carry, like, a bunch of these kind of familiar dynamics. And so now when we look at term structure, you can see it's just getting smacked now, right? Tomorrow's implied vol is only 11. We got down into 5-6% a week or two ago, right? Those short dated vols, but that's the sinking feeling that we're getting. You can see here there is this weird pop due to CPI, but right after CPI, we go back to expecting no vol. So the vol smack is underway. And that is a boost for stocks, and you don't want to be short in the face of that. Maybe you don't want to be long, fine. Shoot yourself, but you don't want to be short in the face of that. So, that's the big thing to really consider here is we have the bullish dynamics back in place, and you just don't want to fight those dynamics at this moment. Now, if you get a bad headline or something else, then of course we could maybe start to turn south again. But now we have some padding, right? When we look at the gamma positioning, I would like to see a little bit more positive gamma here at 6,700 below. And to be honest with you, it's still red down here. So we still got to flip to risk off if we're below 6,700. But for the moment, the bulls have the benefit of the doubt. Again, a lot of this is zero DTE is a toggle this back and forth. You don't see a difference, right? Which is just telling me that it is a zero DT dominated market. Tomorrow, there's no reason the zero DT shouldn't be back in full force ahead of VIX expiration. And so, we're just going to try to ride this bull. Hopefully you got those call spreads that we were pitching to you last week. And on Friday, just to be clear, the only thing we said, the only trade, right? What's the trade? Because at the end of the day, that's what I want. So what's the trade? And we pitched these QQQ or SPX call spreads as a way to play this upside. Now, we pitched these and we're up a nice 1.5%. So that's not a bad little gain here on those call spreads. And again, I don't see a reason to kind of get off this bus right now because we have things going forward. So hopefully you caught that ride up. And that is where we stand. Gold calls credit spreads. Yes, let's talk about that. NVIDIA on the skew chart. To make a calculator calculates the price of an option or spread when your target levels are reached. Interesting question there, Timur. Dr. Cosmo, you're back. Can you walk through what's happening each evening or morning when you recalculate the new levels of index readings? And then can I confirm the equity hub showing the dealer positioning? Yes. So equity hub, that's an easy one. This is how the dealers are positioned based on buy side. So buy side buys a call. The buy side bought the call. And what you're going to see in our system is the market maker or the dealer short that call. So you're seeing the inverse side essentially of what we see as customer positions, customers being buy side and market makers. So gold call credit spreads. This is the new calculator. We've been talking about this. We're launching this. All subscriptions are going to get this starting in a month. No, excuse me, in 1 week, not a month. Chris Stanley's asking about gold call credit spreads. Now, when you look at gold vol, is doing some very weird things. That's why I brought up this chart from the SIBO. We've been, anybody who read this from the SIBO and was caught off guard by the gold implied vol, they're just not paying attention. And this is always so funny because you see all these spot gamma inspired charts here. All right, so right here we see is gold vol kind of going off, right? And you would read through this and you see that gold vol is just going crazy at a historic level. So some interesting background on that, but that's not news to us, right? Because when we look at scanners and we look at the guided view here, we see gold all the way up and to this left. And if you're looking at this and you're like, hey, Brent, that snail trail thing is really cool. How do you get that? Well, you get that in about a week if you have Pro or if you have Alpha. If you have scanners now, you're going to get this beefed up scanner in a couple of days. So you can see what has gold implied vol done over the last 10 days. It's moved higher and it's moved all the way to the left, right? So we are 100% at an extreme, unprecedented level of gold vol, and people are very anchored to puts, which is interesting because it's all-time highs. Right now, most people own gold and they probably want to hedge this out, which to me is smart because gold's up such a ridiculous amount. And so if we look at skew in gold, getting around to your question, Chris, what do we see here? This is on the delta space. I'll just make it look at the fixed strike space. So here's the last 90 days, right? Quite low. And what you're seeing here now is this is the steep skew. Sorry about this. There we go. This is the steep skew. So what is the skew specifically pulling up? That the at-the-money options, which I guess are about here, versus the 25 delta, which is somewhere down here. The spread between these two, right, is as high as it has ever been, basically in the last year at least. And at least if you look at the SIBO data and story, we're starting to get kind of like all-time high levels of gold vol. Now the call skew is not as high, which is interesting to me because this actually looks just as steep right here. This to this looks just as steep, right, as kind of like the 25 delta put to the at the money. Does that make sense to everybody? Hopefully it does. So what does gold vol typically look like for 1 month? Well, like, let's just go back, right, and look at it, and let's look at some kind of really quiet period. So like April is probably not great, but let's look at January or February, because like back before the tariff crap and all that other stuff. So here's 1 month. And then let's look at this on the delta space so we get a good idea. All right, so, this is what gold implied vol usually looks like. So if we just zoom in a little bit on this. So what do you note here? The spread between the two of them, right, is really quite wide, obviously. So you're talking about a 25 delta put, usually is around a 28% implied vol, and we're typically around 15 right now. That 25 delta puts at a 28. And then if you look at the 25 delta call side, you're getting a 30 implied vol right now versus what typically, if we look down here, pick up a delta, there we go. You're talking about 15. So you're looking at a 10 to 15 vol point difference. That's absolutely no joke, right? So what does this matter? If we look at the scanners here, and I want to dial in on this call skew thing because this is important. The put skew is absolutely very high. And then let's also load in the call skew percentiles. And so gold right now is, where's gold hiding out up here? Right here, right? So call skew percentiles only showing us 6%. Not that high. Excuse me, that is quite high. Put skew percentile, 92%, right? So what is that essentially is telling us is that the call skew is reading as low right now, and the put skew percentile is reading as high. So that is the dynamic that we're looking at. So what does that mean? Number one is, if we go to the options calculator, and I want to look at December implied vol. So we can load up the calculator here, and this isn't like a sales pitch for this. I just want to think it's the easier way to estimate what we think is going to happen, right? So this is December vol, right? And let's move over a little bit so we get the kind of at the monies in here. All right. So this is what it looks like right now, right? Here's the 50 delta option. This is the at the money options. Now, to answer Chris's question about gold call credit spreads, in order for gold to pay off at this level of upside, if you were to buy a gold call, you can see the cone here, right? You're going to have to pay quite a bit for a 20 delta call, right? If we hover over this level right now, roughly the 25 delta call right here, you can see that currently it's 25%, right? And the range for that based on that 10th to 90th percentile is 15 to 18. So you're paying about 7 vol points more than you typically would. If you go all the way up to a 10 delta call, so that's really quite stretched, you're still paying, obviously, as you can see there, about a 10% higher implied vol than what you typically would. Now, this is an unprecedented rally in gold, and maybe it continues and maybe it doesn't, but you are paying a lot for calls. Now, if you use a call spread, then what you're doing is you're essentially going to buy this call, right? And then you're going to sell the 10 delta call. So the reason that's kind of interesting is because you're selling that expensive out of the money call, and it helps to offset that implied vol a little bit. The skew here, the difference maybe between a 25 and a 10 delta call seems pretty steep. But if you were to do a call or a call fly in this situation, I think that can make a lot of sense because it offsets that implied vol, right? Now, the problem with doing a call fly in this scenario, obviously, is that if gold has just another 20% upside, the call fly is not going to pay off that well. Like the call spread will be okay, but obviously that call fly won't. The second problem is that let's say that gold just stalls out and that implied vol gets crushed, right? If you're long a 25 delta call, you're going to be feeling a tremendous amount of pain. Or if you put the call spread on, you're going to again offset some of that risk and maybe be okay. And in a call fly, you can actually make money if gold just sort of trends sideways. Now, the other part of this is that if obviously gold starts to sell off, then what is likely to happen here, right? If we look at the put side, you're paying again about a 10% higher implied vol than what you typically get. And in this case, we're getting gold up, vol up. And so the argument that I've been making, as I made in recent notes, I think in Thursday's webinar, we talked about the put fly, or at minimum a put spread, because if gold goes down, then put vol or vol in general is also likely to drop, right? So let's just use our metrics, or if we just want to look at the levels here, just to confirm outside of the spot gamma ecosystem what the difference here, right? Gold is now trading at an implied spread of 12%, 1 month implied versus realized vol, 12.5, and that is extreme. Okay, so what does that mean for us? That means if gold comes down, and obviously if it sells off, it's going to have a pretty big jump, right? But let's say over the next 3 weeks, gold coming down probably means, or month, right? Probably means that realized comes in and that relationship normalizes, which means we're going to lose probably, let's just say, to be safe, 7. Remember, the spread is 12, so if we lose 7, we're still not into that historical cone, as you can see here. But what we just did is dropped, right? Now, the reason I'm using the calculator is because I want to show you what else happens. We've already showed you that the put skew is high, and I think that this call skew is probably a little bit elevated as well. So what happens? That skew will flatten out. So if I move this, what do I mean with that? You can see this wing comes down now, right? So if you're in the call spread and vol comes down and the call wing flattens out, those really cheap 15 to 10 delta calls lose a lot of vol, right? If you're in a call fly, that will pay off a lot, right? Possibly even relative to at the money. And then what happens if the put skew flattens out just a little bit as well? So we normalize. You can see it's quite a small change here, but that's what you're getting, is you're getting this normalization. So in these extreme scenarios where the tails are really rich, you want to be careful, because if you're buying or selling an option that's going to have not only the vol changing on a relative basis, but that skew flattens out, that matters a ton for what you're doing. So getting long, so if I was going to outline what I think the worst trade is right now, it would be buying like a 20 or 10 delta put in gold. A put spread makes sense to me here. I like put flies. That's what I'm in for January. I think the other side of the equation, which is really bad, is buying something like a 10 delta call, right? Because you're just paying admittedly very high prices with the stock up or gold up an incredible amount, right? So you really need not just more upside in gold, you need this unprecedented upside to continue. Does it mean it can't happen anymore? Of course it could keep going. I don't know. It's just now we've moved to this realm where, look, it's very expensive. So when I look at this, I go, if you want to play gold upside via calls, you probably missed that bus, right? And you need something stupid just to keep happening for gold to continue at this pace. I think that a gold correction seems a little bit more likely just based on the basic mean reversion principle, right? And if I just buy puts and gold starts to come down, but it doesn't come down a lot, I'm overpaying for those puts, which is why I like the put fly. But also the put fly in January, the reason I chose January is because my carry is very cheap because I'm in the put fly, right? Which I like. So I can wait out. Maybe the Trump Z meeting goes fine, and maybe the Russia-Ukraine situation, they shake hands. Maybe the Israel thing moves to full peace. Like whatever is causing gold to be weird, the government shutdown, whatever it is, I got enough time that I can carry through that. And if I get a gold correction, then I'm like, okay, great. I'm going to profit off of the put skew flattening and that coming down. So to be fully transparent about what I did, this is not a recommendation. Let's just be transparent. Let's see what this looks like for me. And again, we're talking about, this is decent implied vol, so 60 days to expiration. I did the January, so it's a broken wing as well. I bought the Jan 340 puts. I sold the Jan 325 puts, and then I'm long the 300. So it's a little bit of a modified wings there, as you can tell. Not super wide wings. And I went with that because I don't think that gold has a 30% drawdown. And the way that I was trying to position this, and those of you know when we try to structure the when we try to structure a lot of the zero DT trades, is oftentimes what I'm looking to do is essentially get a long put for free. So I'm at this put and then, short 2 of these and then long this one. And what I'm trying to do, and I may monkey with this or trade this a little bit more, is I'm trying to basically get, if I can get this option for essentially free or very cheap, what I want is this structure to have negative delta when the market starts to move down, right? So if GLD starts to break, I want this put, which I own one of, right, to make me more money than the 2 that I'm short are going to lose. Because we're short 2 puts and we come down, we're going to lose. So the -2 is more of a bet on vol coming in or offsetting the IV crush. And then hopefully this is the negative delta side of the equation that starts to generate some P&L. Calendar spreads is another way to try to do this, and maybe having a diagonal would also work, like a D's versus like a March or something like that. Again, the problem with this is I don't know what the trigger is for gold to unwind. My guess is that it's going to be some positive news that just takes the momentum out of this thing. So that's the initial spread. When I'm kind of looking at the legs, I'm like, I don't know that I like really love those legs. I'm also in no 325, 300, 275, just a regular put fly. But those are the general ideas I'm doing. And again, the idea here is that gold can drop and then just sort of hang out in here. And if that's true, and I get a 15, to 20% correction in gold in particular, then that structure should pay off pretty well, because this put will be, will wake up, right? And hopefully these deeper ones won't. And when put skew flattens out, offsets a little bit. So that's the general idea. And you could probably structure call flies as well that make money when and if gold corrects and that skew all flattens out. So that could be the other interesting trade here in gold. You also may be able, and I haven't looked at this yet, but the implied vol is so elevated that if you go out and you say, okay, like I'm just going to sell, I don't want to pitch, like I don't ever want to pitch selling just naked puts. So we're not saying do these naked, but if we just look at something like June, well, June's pretty far away. Let me get it earlier. So you look at like a March, for example. Look how high that vol is, right, on a relative basis. So you may look at a situation where you're selling just some really teeny out of the money put in gold, right? Some March or really longer data, because that whole vol surface will lift up so much that when and if vol does correct, that could be another way to kind of play that vol correction. So yeah, and then Dejan's asking for far out of the money, they're cheap puts. Why don't I bring it towards near the money? Because you want to. So like, if you're trying to sell vol, right? You're not. You got to remember, you're not selling pure vol in gold when you sell an option. If you sell the straddle, it's a little bit closer, but you're not going to be delta neutral for more than a few minutes, maybe, right? Because as soon as gold drops, vol is also going to come in. So now you're wrestling the change in price, which is the delta, versus also the issue of volatility itself changing. So I know I'm spending a lot of time in this, and we should like move on. But the issue is here, just to be clear, and we talked about this on Friday. So if you see the Sunday Night Note, we went through this in detail. The issue is that your P&L is going to change a lot based on this. And just to make sure this is clear, so if we choose the so if we choose like my January options that I was looking at, for example, right, and I look at just the 340 put, so the 340 put way out of the money at this point, as you can see here. So this is what that structure looks like. And if we reset vol, where we say, hey, vol is going to come in even just 5 points, and that put skew flattens out a little bit, right? Now you see the difference in the vol in the red line. And so now when I say, okay, well, what does that mean for my P&L? You can see what the market projects. If we start to correct here, what does the market project? Market projects my position would start to make about $390. See that? If we're at 360 in gold. But what happens when I adjust my actual implied vol? That's what that purple line is. I may not actually make any money on these puts, right? If vol moves down like that. So that's what the problem is. The more at the money you go, the less sensitive, you would assume that P&L would be, but you're going to pay a lot more for those options. So that's why you really got to be careful about what it is you're trying to do here. I also think in gold, once you see one kind of a 1 or 2 days down, right, you're going to see that trade lose momentum. Then maybe you get a little bit more aggressive. Clearly, right now with it up 3%, we haven't quite lost that momentum. So it's like starting to build that short position with a cheap to carry that can, and I want to try to get downside exposure without being too long vol, because if vol comes in, that's just going to really smack my my position. Chris is saying NVIDIA seems to be high to mid on the skew chart, while the scanner's rank is relatively low. Could I review how to interpret the 30 to 90-day statistical range? Yeah, so the way to think about this is quite basic, right, Chris, to make it clear. NVIDIA, which is down here, right, this is based on the last year of data, full year. When you go, and so we're at the bottom left. So implied vol is relatively high, right? For just a normal environment. Like, you had DeepSeek, you had the April tariff freak out. All that is still in the last year window. So, that's where NVIDIA had its worst days and its highest implied vol. And then also there's no earnings yet for NVIDIA. So this is a relatively high implied vol reading for just a normal market at 28%. This is based on the last year. So when you go look at vol dashboard and you're saying, well, what is this cone showing me? And I look up NVIDIA, this is seeing, normally I have it to the last 90 days, right? But this is all that look back is the last 30, 60, or 90 days. And so when we're looking at this now, what we see here is the at the money call based on the last 90 days. I'm looking at January options, of course, at the moment. That's what I've loaded in here. These are reading is a little bit rich, right? Versus the last 90 days. So there is some demand, long demand here coming in, which is interesting, right? And this sort of suggests if I was buying those, longer dated calls like this, maybe I want to go call spread, because that seems to be a little bit on the rich side. So I would want to be very cognizant of that if I was getting into some of these NVIDIA call positions. Now let's just round this up by looking at Equity Hub and checking positions. So we look at the gamma. We see a ton of gamma at the 188 strike. And so that's the short-term kind of target resistance area. I would say we're at 183 right now. Big tepid move up. I think a lot of this would have to do with earnings, right? The NVIDIA, or if the AI story is intact, then we're probably all right. And just take a look at the earnings charts so we're all aware of what's coming up. We have Netflix on the 21st, so that's tomorrow. A couple of these banks I mentioned are reporting tonight, so be aware of that. Here you got IBM and Tesla coming up on the 22nd, right? So that's the big short-term thing to pay attention to. And so I saw there was a question about Tesla. So if we start with the scanner here, you see here is Tesla, right? The implied vol rank is at it's JP Morgan. I'm trying to highlight both of these and they're overlapping each other. Let me just get rid of the history here. Clean it up. I frustratingly can't click the Tesla.
The White House says the Pentagon is to invest in a gallium refinery
so there's
in Western
Tesla,
Australia.
Implied vol rank 27.
Furthermore, Australia to buy
risk reversal
1.2
rank,
billion
so
in order
very
unmanned
neutral,
vehicles,
right? IV,
and the US secures more access for US beef in Australia.
And the IV
The
rank,
White House says Australia
so
funds
that's neutral,
to raise
and then
US
risk reversal is about
investment to
50%, right?
1.44 trillion
Not
by
much going on there.
2035.
And then
The
let's
White
just
House
take a
says
look at the vol
Australian
dashboard. Now,
lunar
what we want
rover
to see is there a
NASA's
big skew
Artemis?
here to the call side or put
And the White
side
House
that
says the
maybe
US
we
and
could
Australia intend to invest more than $3
move
billion
against? And what you see
in
here is
critical
not
minerals
really,
projects
right?
in the
I
next
mean,
6
yes,
months.
there is a call skew here. And again, I'm looking at January, so let me just shorten up.
Furthermore, the White House says
what I'm looking
Australia
at.
to
Just look
invest
at-
$2 billion in US companies for its joint air
Right.
battle
So
management
here
system.
is the
Australia to take Apache
11/21, so
choppers
November
in a
monthly expirations,
$2.6
right?
billion deal.
This strikes me as a relatively low call implied vol. The put wing seems, as bid as it's ever been in this environment, maybe because the Trump Z meeting is a big deal for Tesla and imports and rare earths and yada, yada, yada. But there doesn't seem to be an excessive bullishness in Tesla, which I think is quite interesting at the moment. And then if we just go look at Equity Hub and see what the positioning is, there's a lot of positive gamma in and around here. And then again, at kind of 455. So you're in this pocket. And we've seen Tesla so many times have negative gamma at strikes above, and it just doesn't right now, right? It's very kind of neutral to flat. What is the implied move here for earnings? I didn't check that before we moved away. So the implied move is 6.7%. All right. The way that we've looked before, what I think the max implied move is we go to the old school model, and we like to look at this because we like to see what is the field, right? How big is the playing field? And the idea here is where these curves flatten out to the downside or the upside is sort of like the absolute maximum of where dealer hedging flow could drive the name. So if you think about the total open interest model I'm looking at now, this is all open interest. We don't try to say this is buy side and this is sell side or whatever. It's just like, here's total open interest, and this is the maximum picture of gamma in Tesla. And what we've seen before, again, is where these curves flatten out is kind of the fair value area for Tesla, and so, or any stock. And what you note is this strike is massive, right? 500. There's so much gamma there, and the put gamma flattens out above there. Call gamma kind of still seems to go. So when I'm looking at this, man, I can't help but feel like there's room to the upside another 10%, right? And I don't know what earnings will be. There's no guarantee there, but that calling seems to be underpriced a little bit. And then when you also look at the downside, you're all the way under. This is like 350 right here, right? Where this gamma down here starts to flatten out. Particularly here is 400, which is another big strike. So it feels to me like $50 move is kind of what would make sense or seems to be on the table for Tesla. And when you look at the implied vol, it's not that rich, right? I mean, let's take a look at the forward implied vol to see what the change looks like. So you're going to get this looks like a 5% implied vol change. If you go to 1121, the forward implied vol is only about 6. So what I'm wondering is two things. Number one is the move feels maybe a little bit light. Doesn't seem like a home run to sell implied vol. And if you look at this longer dated stuff, for example, there's the implied vol seems almost like fair, right? It's fair value. The second dynamic here is the negative gamma to the upside seems like it largely disappeared. There's a ton of positioning at 500. So I almost feel like an interesting way to play it is maybe like a 500 550 call spread, something like that, maybe. I don't know. That to me seems to be very interesting. And then I don't know what this Trump Z meeting, how much that has to do with Tesla, again, at the rare earths and the regular rest of the complex. But you can see that the implied vol here, it has a narrower spread, right? Which I think is also important. So if you had to short vol here, which I just don't love that idea, I would target the 1031 options, maybe because it doesn't necessarily include the Trump Z meeting. But this is very odd to me. It's like what's odd to me is that normally what you'd expect to see is something like this, right? Where there's a spread, forward implied vol looks like the purple line, right? But we're not seeing that. And I don't know, maybe they have another event coming out or something like that. But you also have FOMC and other stuff in this area. So be cognizant of that. What's another name that's reporting, just to see if this is a similar thing? Because QS is this quick strike, is that what that is? So let's look at IBM and quick strike just as an example. Quantum space. So see this? Like, okay, maybe they, this must be, I'm not sure if there's an event related to them here, but see how this curve is below across the board, right? What about an IBM? Same thing, right? Curve is lower across the board. That makes sense. So something is weird in Tesla. I don't know what's going on with that. Maybe there's a robo-taxi event. Maybe there's a robot. I don't know. There could be some other event there, but that longer date implied vol seems cheap. Calls seem cheap. Call spread. I don't want to be a long the naked option or something like that. But man, that sometimes stuff jumps out at me, and that seems to be what's jumping out at me at the moment. Newmont Mining. Let's just take a look at that because of the gold space. I'm curious what that looks like. Very elevated, right? I mean, I don't know how much the earnings are going to be impacted by gold, the commodity. But this makes sense as maybe more of a short vol play. Maybe selling a straddle or something, or maybe even like put flies and call flies or something, right? To bet on that. Maybe it won't be that impactful. I don't know anything about this space, but given that gold backdrop, these earnings are likely to be way more exciting. And I don't know how much the mining actually matters here when the commodities going up. Maybe they've offset their exposure, or who knows. Now, if you want to look at something that's dumb, I still think Intel is like one of the dumbest things out there. Here's another example. The term structure just collapse, right? Very cleanly across all expirations and strikes. There is a pretty fat spread here, right, in terms of the put side, right? The put wing seems more elevated than it's been, and that call skew is starting to flatten out. But this name, you have to remember, it's a new name versus what it used to be in terms of upside, right? No one ever cared about the upside in this thing before. And so when you look at here, you still see a lot of negative gamma here over the 40 level in particular. And that's the way that Tesla used to look like. Here's Intel. It has a 10% implied move. I'm pausing because I just think this whole thing is really stupid, the Intel thing. And if you just look at the data here over the last 90 days, which is kind of like the new era of Intel, this call wing seems, bid and fairly rich, right? The stats they'll show that it's been a little bit of a wilder trade. So let me look at this in the delta space, see if this changes at all. Yeah, so it's kind of the same thing. Like, Intel jumped so much because Nvidia's investing and the government's investing and everybody else investing in it for whatever earnings. I don't know why that would matter for these current earnings. You need a 10% implied move. To be honest with you, I think maybe the trade is to sell the put side, maybe like a put fly. So you want to bet implied vol coming down. It is negative gamma to the upside. I don't know why they'd surprise to the upside, but a 10% implied move. Over this 40 strike, the positioning really disappears. Look at the total open interest model. I mean, that 40 is just such a massive level. Based on this logic, could it bleed a little higher? Yeah. So maybe a straddle or strangle. Excuse me, a strangle makes sense, or I think maybe selling the put wing, just bet on a vol coming in can make a bit of sense. So again, if you just are considering this extremes here, make sure Intel's on my list. Where is it hiding out on my list? I don't see it on here. Oh, I probably got hidden. There she is, all the way up here. So based on the last year of data, that call wing is particularly rich. And so the scary thing is that they announced that they got some kind of investment from somebody else, or they go OpenAI and then suddenly the stock goes to some stupid level, right? That's the thing that makes me pause and hesitate about this a little bit. But a put fly or even a call fly doing both is like a Batman kind of trade. I don't mind that. I think that put vol in particular probably can take a chunk in. All right. Dr. Cosmo nicely asked a question about half an hour ago. Can walk through in the evening or early morning, we recalculate the new levels spot game index readings. For example, when are those trades occurring given U.S. markets are closed? All right, so today's data, right? Anything you see in Equity Hub is based on, look at our current model, all the trades that took place